Hello, I'm Judy Woodruff. The Federal Reserve Chairman announced this week for the first time that a U.S. recession is possible. The Bush administration and the Congress are trying to prevent a deeper economic slump. Billionaire investor George Soros has just released a new book that explains the current credit crisis and its implications for the future. His book, The New Paradigm for Financial Markets, says the U.S. economy is in the worst financial crisis since the Depression. We spoke to George Soros about his book, the U.S. economy, the global economy, the housing markets, and politics. George Soros, thank you very much for talking with us.
Pleasure.
You write in this new book that we are in the midst of a financial crisis, the likes of which we haven't seen since the Great Depression. Was this crisis avoidable?
I think it was, but it would have required to recognize that the system as it currently operates is built on false premises. So, unfortunately, we have this idea of market fundamentalism, which is now the dominant ideology, that markets are self-correcting, which is false, because it's always the intervention of the authorities that saves the market when it gets into trouble. We've had since 1980, we have had about 5 or 6 crises, Continental Illinois, LTCM, the international banking crisis in '82, where each time it's the authorities that bail out the market. So the regulators ought to know that what they're doing. And somehow this idea that markets tend to equilibrium, that deviations are random, has gained acceptance, and all these fancy instruments have been built on them.
You said it's avoidable if people had understood what's wrong with the current system. Who should have recognized that?
It really is the authorities, the regulators.
The Federal Reserve?
The Federal Reserve and the Treasury, they really failed to.
When should they have seen this?
Well, Gramley warned in
former Fed governor.
Yes, he warned in 2000, and then he wrote a book, I think, in 2000, was published in 2004 or 2006. So a number of people could see it coming, and somehow the authorities didn't want to see it coming. So it came as a surprise. So
who? Are we talking about the chairman of the Fed, Mr. Bernanke, his predecessor, Mr. Greenspan?
Yes,
what are you saying?
All of the above, but I don't hold them personally responsible. But because you have a whole establishment, I mean, the economics profession has developed this theory of random walks and rational expectations. That's what you learn in college. Now, when you come into the market, you tend to forget it because you realize that that's not how the markets work. But nevertheless, it's sort of the basis of your thinking.
How much worse do you anticipate things will get?
Well, you see, according to my theory, you can't make any unconditional predictions because it very much depends on how the authorities are going to respond now to the situation. But the situation is definitely much worse than currently recognized. You've had a general disruption of the financial markets with much more complete than any we have had so far. And on top of it, you have the housing crisis, which is likely to get a lot worse than currently anticipated, because markets do overshoot. They overshot on the upside, and now they are going to overshoot on the downside.
You say the housing crisis is going to get much worse. I mean, do you anticipate something like the government setting up an agency or a trust corporation to buy these mortgages?
I am sure that it will be necessary to arrest the decline because, as I say, the decline, I think, will be much faster and much deeper than currently anticipated. In February, the rate of decline was 25% per annum. So it's accelerating.
Decline in
Housing prices. Now, foreclosures are going to add to the supply a very large number, because now you've got about 600,000 annual rate of housing. You have 40% of the subprime mortgages, about 6 million mortgages, which are going to go into default in the next 2 years. And then you have got these option arms and other mortgages, adjustable rate mortgages, that are going to be about the same magnitude. So you've got maybe 5 million defaults facing you. Now, it takes time before the foreclosure actually is completed. So right now you only have maybe 10, 20,000 coming into the supply. But that's going to build up. So the idea that somehow in the second half of this year the economy is going to improve, I find totally unbelievable.
So how long does this last?
Well, it depends on when the authorities wake up, and because you need to reduce the number of foreclosures, you need to keep as many people in their homes as possible.
You've said that the Federal Reserve had to step in to engineer this buyout by J.P. Morgan of Bear Stearns to prevent a much bigger catastrophe. Yeah. And you've also said to do this, the Fed had to take on considerable risk. Is this an unhealthy amount of risk that the Fed has taken on?
This is their job. So it's unhealthy or not, I don't think it's actually so severe. But it's something that the Fed, that is their job, to save the system when it is endangered. However, because that is their job, it ought to be their job also to prevent asset bubbles from developing. And that task has not yet been recognized. I mean, you know, Greenspan spoke about irrational exuberance, right, once. And it had a bad echo, and they stopped talking about it. And it's generally taken that the Fed tries to control core inflation, but not asset prices. I think that asset prices have to be an objective to prevent asset bubbles, because they are so frequent. And
that's more than what the Fed is doing now.
It's more than what it's doing now. So you have to recognize that just controlling money doesn't control credit. You see, money and credit don't go hand in hand. The monetarist doctrine doesn't stand up. So you have to take into account the willingness to lend. And if it's too great, you really have to introduce margin requirements and try to discourage it.
You talk about currency, or you reference currency. You have more than a little expertise. You were described as the man who broke the Bank of England back in the 1990s. But what is your sense of where the dollar is going? We've seen it declining. Are we going to, do you think the central banks are going to have to step in?
Well, we are close to a tipping point where, I mean, the willingness to hold dollars is definitely impaired. But there is no suitable alternative. So central banks are diversifying into other currencies, but there's a general flight from currencies. So the big surplus countries have all set up sovereign wealth funds, trying to diversify their assets from monetary assets to real assets. That's one of the major developments currently, and those sovereign wealth funds are growing. They're already equal in size to all the hedge funds in the world combined.
Few people know more about hedge funds than you do. You've been enormously successful with your own hedge fund. Should hedge funds be more regulated?
Well, I think hedge funds need to be regulated like everybody else. And the amount of leverage that people are allowed to use has to be regulated. But I think it's best done through the banks. In other words, the banks' reserve requirements should be tailored to the riskiness of their customers. So funds that use a lot of leverage ought to be very risky, and therefore they would not get the amount of leverage because the banks wouldn't give it to them.
New regulation, though, could that impede the ability of hedge funds to be the big players that they have been in these markets?
Yes, I think that there has been excessive use of credit, and it does have to be limited. So we are now in a period of very rapid deleveraging, and I think that in the future we ought not to allow leverage to be used to the extent that it has been in the past.
Your book, the philosophy that comes out of this book, who do you want to read this? Who do you want to hear this and act on?
Well, right now I think it is of interest to people involved in the market. But my hope is that I'm making a much broader point about reflexivity, the imperfect understanding. What I'm arguing is that human affairs have a different structure from natural phenomena, because natural phenomena occur, one fact follows another, and actually we can gain knowledge and understand and predict what happens in nature. Now, we should not go back to a very, very highly regulated economy, because the regulators are imperfect. They're only human, and what is worse, they are bureaucratic. So you have to find the right kind of balance between allowing the markets to do their work, but recognizing that they're imperfect. You need authorities that keep them on things. So that's the message that I'm trying to get across.
You write, we are at the end of an era. When this current credit crisis ends, will the U.S. still be, no doubt about it, the world's super power when it comes to the economy?
Not at all. This is now in question, and we now have entered a period of really considerable uncertainty and turmoil because of the general flight from currencies, which manifests itself in the commodities bubble, which has developed. The price of gold, and it hasn't yet finished. So what comes out of it is very open to question. I think that you will have to somehow reconstruct the global architecture, because you have to recognize the economic weight has changed considerably of the different countries. China has become much more important, India and so on. What kind of system will evolve of this, I think, is a very open question.
So who will be, what about China? How much of a economic competitor could it end up being?
Well, China is rising. It's been the main beneficiary of globalization. Their currency is significantly undervalued, and for various reasons, they have to allow it to appreciate. And they are now, it's been going at a rate of 10%. It's been accelerating now to 15, 20%, which makes the situation more difficult for the Fed, because you now have the prospect of core inflation accelerating, because if our imports coming from China go up in price by 15%, it will come through in core inflation. So this is
in this country.
In this country, the price of goods in Walmart is rising and will probably rise at an accelerating rate.
So instead of thinking goods are cheaper from China, you're saying the prices go up. It affects everything, so many things that we buy in this country. Thoughts on Russia and where its economy, how its economy is doing?
Well, I try not to think of Russia, actually, because I've had a very bad experience there. Basically, the country is benefiting from a higher price of oil, but at the same time is reestablishing a very authoritarian regime where the rights of investors are not respected. Now it is British Petroleum that is being chased out. So you invest at your own risk. I've done it, and I'm not going to do it again. So
what you see in Russia tells us that political freedom and economic freedoms are separable after all. Well, the lack of political freedom also impinges on the rights of shareholders. So it's not a suitable area for investing exactly because you don't have the rule of law. Most attractive emerging markets? Well, I think actually I got burnt in India because I didn't sell, but I think at this time, for instance, in the outlook for India is very good. Should the next president be prepared to sit down with the leaders of organizations like Hamas, like Hezbollah, countries like Iran? Oh, you think? Absolutely. And I wrote another book about the consequences of a war on terror, which I thought this whole idea of a war on terror is a misleading concept that has got this country off on the wrong track. It is responsible for our invading Iraq under wrong pretenses and for a decline of our political influence and power and military power that has no precedent. Bringing us back to this country in the midst of this economic credit crisis that you write about and that you've been describing, we are also in the middle of a presidential election. You've endorsed Barack Obama the day he announced. Right. Why him rather than your home state senator, Senator Clinton? Well, I have very high regard for Hillary Clinton, but I think Obama has the charisma and the vision to radically reorient America in the world. And that is what we need, because I'm afraid we have gotten off the right track. And we need to have a greater discontinuity than Hillary Clinton would bring. For all the reasons that you cite, no concern that he lacks the experience to lead in this dangerous time that we live in? I think that he's shown to be a really unusual person, and I think this emphasis on experience is way overdone, because he will have exactly the same advisors available as Hillary Clinton. And it will be a matter of judgment whom he chooses. And actually, he's more likely to bring in new blood, which is what we need. And you're confident he'll listen to those advisors? Well, I think so. Recently, Senator Obama has endorsed some of the things we've been talking about, greater financial regulation, having, for example, the Federal Housing Administration insure unaffordable mortgages against default. Do you think this goes far enough, what he's talking about? Did he talk with you at all before he
No, I've had absolutely no contact with him or any of the Democratic leadership on this issue. Maybe now that my book is out, maybe I will in the future. But these are my ideas, and they are not responsible for them. From what you know about what he's saying about the housing crisis, do you think he goes far enough? No, nothing yet right now goes far enough. And says Representative Barney Frank, who is actually really understands the issues, is not pushing that far, because in order to get partisan support, you can't. So if you want something done, you have to set your sights lower. And that is what he has done, and I think he's getting a few things through, but they are not enough.
You talked to Congressman Frank about what he's doing?
No, I haven't. No,
but this is your
This is my interpretation
assessment
of what he's doing.
In 2004, you gave, what, $27 million to various Democratic Party liberal organizations. Far less than that this year. Why?
Well, because I think that was a unique time, and really not having President Bush reelected would have, I think, made the situation for this country and for the world much better. I think now it's less important. And in any case, I don't feel terribly comfortable being sort of a partisan person, because I look forward to being critical of the next Democratic administration.
Well, George Soros, thank you very much for talking with us. The new book is The New Paradigm for Financial Markets, the Credit Crisis of 2008. Thank you very much.
Pleasure.
And that's our conversation about the economy and the current credit crisis with George Soros. Thank you for joining us. We'll see you next time.